Everyone, David Coe, the Coe Real Estate Group. Hey, this is going to be our last newsletter and video for 2024. So I figured this would be a good time to start taking a look forward at what to expect in 2025 in the real estate market. But before I do, I want to start off by issuing a huge thank you to all of you that showed up for our annual Toys for Tot Toys Drive. We had a lot of good friends that showed up. The Marines showed up. We had about 2 boxes of toys. Plenty of food, plenty of drinks, and again, thank you to those that donated ahead of time and actually showed up and donated a toy and your time to come support this worthwhile cause. We're already working on 2025, and it promises to be our biggest and best ever. So, speaking of 2025, let's jump into it. So, the first thing we're looking at as an indicator for 2025 is inflation. And you can see here in November, we're going to end up right around 2.7%. When we look at the year, July, August, September, we were slowly creeping down to that magical 2% rate that the Fed likes to talk about as their target rate. And then all of a sudden, October, November, things kind of started to switch course a little bit. Now, we're still way below where we were at the beginning of, end of 2022 and the beginning of 2023. But, seeing a decrease in inflation could be good for real estate. Seeing an increase in inflation will probably have a neutral effect on real estate unless it goes super high, and then it could have a really detrimental effect on real estate. The next one to look at is GDP. And GDP has been relatively flat, for the last couple of years. 2% is also kind of a historical goal for the economy. As of quarter 3 to 2024, we're just above 1%, maybe 1.2%. And that's pretty much where we've been throughout 2024. GDP also kind of has this relationship where if GDP grows, that could kind of have a neutral effect on real estate. While that may not necessarily lower interest rates, it could be that people are doing really well and have enough money to afford real estate. Versus if GDP takes a really sharp dive down, that actually could have a positive effect on real estate, because generally when GDP goes down, the Fed will cut the rate, and when they cut the rates, interest rates tend to fall, which could be good for real estate, especially in the kind of pent-up demand world we've been in for the last 3 years. The next one to look at is unemployment, right? Unemployment also kind of has a little bit of this, too much of a good thing versus too little of a bad thing. We're at about 4.2% right now. We have been slowly ticking up over the course of 2024, which even though these are moving up, this is still relatively low when you look at things historically. So a little bit of an increase in unemployment could be good for real estate in the sense of that might be one of the key drivers of the Fed cutting their Fed rate, which will have a direct impact on interest rates. But if we have too much unemployment, while interest rates may come down, you have to have a job to buy real estate. So if you're unemployed, that's going to make it really hard. Looking at that, if unemployment really takes a stark turn down, which might also correspond with GDP taking off, that actually would probably have a negative effect on real estate, because interest rates would stay fairly high, and affordability could also start climbing and stay high. Speaking of, interest rates is clearly something we keep an eye on almost on a daily basis. You can see at the beginning of the year, we were kind of right around the mid to low 6s. And then, we had a really strong start to the year. February in particular, March, things were really getting busy. And then all of a sudden around in April, interest rates kind of, started climbing again. And we kind of lost out on that second part of our spring selling season because interest rates got up into the 7.5% range. And then through the summer, things were pretty quiet, but they dropped down, in September as unemployment started hitting that low 2% range. Interest rates fell, the Fed lowered their rates, and man, we got super busy September, October, and then all of a sudden rates started climbing again and things cooled off again. So what this tells me is that we have a very sensitive market to interest rates. And as interest rates go up, things will get pretty quiet because affordability really takes a shot. But if rates come down, that level of affordability that it creates by interest rates coming down is really going to have a huge impact on the real estate market. And then when we look at month supply, right, a typical balanced market is usually 5 to 6 months of homes, right? We have been chronically below that for almost a decade now. We're still kind of in the low fours. Earlier in the year, we did kind of get even lower in that 2% range. That is when interest rates almost hit 6%. Man, things went crazy. And then as rates started to go up, inventory started to build. And here we are at 4.2%. But we're still below that 6% rate, which is an indicator of a balanced market. So I would say this is probably going to hold pretty steady throughout 2025. Again, unless we have some kind of event that affects interest rates either higher or lower. And if it's higher, day supply will go up. And if it's lower, day supply will go down. So a summary of the year, when we look at the consensus of other economists out there, the consensus is pretty much more of the same. Actually 2025 will probably look slightly better than the 2024 housing market did. When we look at some of these key indicators, everything's kind of trending towards the norm, right? Interest rates being in the low sixes, mid sixes, maybe touching the high fives. Historically, that's where they've been. We had a generation of mortgage rates in the sub 4% range, but that's the only time in the history of our housing market they've been that low. Historically, things have kind of been in that high 5, low 6, and we're kind of trending that way. Same thing with supply, right? You really can't have a huge decrease in pricing unless you have a huge increase in the number of homes that are on the market. We're still not building as many homes as we should. There still are a lot of people that are, enjoying their 2% mortgage rate, and they may never sell their property. And that's going to keep supply on the lower side, which should also put some upward pressure on price, but not that much, right? Having 4 to 5% of homes is going to put you in a situation where, depending on the property, you might find some great deals, properties that have been on the market for a long time, or you could also find that really great, perfect property you've been waiting for. Well, you and 9 other people have been, and you could be in a bidding war. So, day supply, month supply is going to be key to look at, and all of that's going to impact transactions. We've been in 2023, we did just about 4 million homes around the country. This year, we're going to do right around 4.2. I think for next year, we'll probably have a little bit of an uptick up, trending back towards the norm, which is about 5 million homes a year. But I don't think we'll get there. I still think there will be a lack of real estate volume, transactional volume. Prices will stay relatively flat unless rates come down significantly, then all bets are off. And then, the overall economy is a great indicator, but it's kind of an inverse indicator, right? So if we do have a recession where GDP starts to fall, job unemployment rates starts to grow, that actually could be good for real estate because the Fed may lower their rates, which will in turn impact lower mortgage interest rates, which will in turn improve affordability, and we could have a real estate market that has a lot of transactional volume and maybe some price growth. Or if we continue to have a strong economy where we're growing, maybe at a moderate pace, that may actually have no effect on interest rates, which could kind of keep us in this low supply environment that we're in right now until we have some kind of breakthrough either in home building or more importantly, something to where interest rates come down and people decide that they want to sell their houses and move opportunistically versus just moving because they have to move. So I wish you and your family all a happy holiday from all of us here at the Co Real Estate Group. We hope you'll spend this holiday season with your friends, your family, whether you're celebrating Christmas or Hanukkah, whatever your holiday is. I hope you find some time off, and I hope you spend it with the people that you love. And lastly, I'll ask for something. We would love a testimonial. You'll see a link below, either our Google page or our Zillow. We'd love to hear something kind. If you've ever done business with us, if you've ever come to one of our crawfish boils, if you've ever worked with us, if you're another vendor, or if you just know us and want to say something kind, we'd really appreciate it. So see the links below. Happy holidays. I hope you have had a great 2024. I hope the prospects for your 2025 are super strong. And I hope to see you and talk to you next year. David Code, the Core Real Estate Group. Talk to you soon.